Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, October 26th, 2010. Well, another gap down in the markets today where we saw the markets rebound dramatically back to the flat line, and then they're really holding the flat line at this time. And you might say, well, how come every time we see a gap down, the market always responds with a buy program to the upside? And the answer to that would simply be POMO, Permanent Open Market Operations by the Federal Reserve. Again, I believe it was $2.5 billion today put in the market, and again, that's basically a propping of the markets to keep them flat to positive. So again, that's where we sit right now. The SPY is down 10 cents on the day. You can see initially we were lower. Very, very nice gap down today because of some key GDP numbers out of Europe overnight, and the European markets were selling off. The dollar was stronger off of that GDP number in Europe as well. I think it was in England as well, the UK. And these factors, again, pushed the dollar up overnight. We know that the dollar responds or causes the markets to sell off when it is higher. And as soon as the dollar starts to fall, the markets start to rebound. And that's exactly what we saw with POMO today. POMO is a way to obviously buy the markets, infuse capital into the markets. It's also a way to drop the dollar by infusing more money. You obviously dilute the currency base, and that brings the dollar down. So these factors, again, help the market stay up. And that's really why you have not seen a sell-off in this market for probably a good 2+ months. I mean, we've had, I think, one down 100-point day in the last 2 months. And again, that's a good example. And the only time that happened, by the way, the one down 100-point day on the Dow or more was when China raised interest rates, and that's an effect or that's a catalyst that really can't be controlled because you have a flurry, it's unexpected, and that's the one day that you get the sell-off. Notice how every other day the markets are very controlled. Here you have a gap down today, it floats gently higher, you get a beautiful three-tail theory, which is a proprietary technique we teach our premium subscribers. You also get a bottoming tail as well. These factors tell you the market's going to go up. I told my subscribers there was a good probability of that, also based off of POMO and knowing that was going to happen. The markets did rally higher right to gap fill. At gap fill up here, that was your shorting opportunity. Notice how you shorted. If you shorted gap fill, you made a good chunk of money on the way down, and then you just chopped and have gone sideways and are basically floating sideways the rest of the day. And again, it's only 1 p.m. Eastern time at this point in time, but certainly the market, it could be argued the market is done for the day at this point as the volume continues to get lighter and lighter into the afternoon session. We've only done 87 million. I would say probably we're on pace to do 130 million. The market, again, probably will not see a fall until you get to the elections. And once you get through the elections, and by the way, right after the elections, you have the Federal Reserve key meeting where they're going to reveal QE2. So that here you have the elections Tuesday, then I believe it's a Wednesday final meeting day, where they'll announce at 2:15 next Wednesday their QE2 policies. And then after that, then I think you have a possibility for some good volume to return in this market. But I just don't see volume being in this market through this current week and into early next week until we get through the elections and that QE2 announcement. All right, so just keep that in the back of your mind. And what that should be telling you is that chances are, unless we have some freak accident out there where, and this is what I always say to my subscribers in the research center as well, that, you know, if someone in Europe defaults on a major, you know, like a country in Europe defaults, well, then you're going to cause a major sell-off in the markets because that's going to be something that's unexpected. But if everything else is kept pat, you should not be looking for any selling going into the end of this week and into early the election week next week. All right, now again, market slowly going sideways. The SPY is down about 5 cents on the day. Let's take a look at the dollar. The dollar is slightly stronger on the day, but again, as you can see, it's just floated off the highs up here. It's inching up just a tiny bit, but the volume is so minuscule on this market, and with POMO involved, which is propping, it's very, very hard for the markets to really fall, even if the dollar is floating sideways and slightly up at this point towards the early afternoon session. So again, dollar slightly higher, market's basically flat at this point in time. The Dow currently trading down 5 points, NASDAQ up 7 points, S&P 500 down 38 cents on the day. Okay, so again, a very, very flat market. Now let's go into gold and oil. With the dollar slightly higher, gold is basically flat, as is the oil trade. Oil trading right here down or up a penny on the day. You can see it's off the highs after the dollar fell initially and lifted the markets up. It rallied beautifully, but again has come back in just a little bit. The GLD is basically flat as well. And again, you can think about it like this. People are continuing to worry about the inflationary scenario down the line in this market. That is continuing to be a concern. That's a whole reason why gold has done what it's done, along with the drop in the dollar. Oil, same thing. Oil is going to be a continued possible play for safety, although oil still has a play in the demand side of the curve. So if the global economy looks healthy, more likely you will see oil continue up, even if gold does not, and vice versa. Oil can go down even if gold goes up if the demand for global energy looks like it's failing or faltering. All right, now let's go to a couple other key charts today. What's some of the big news out there? IBM up $1 today. IBM gapped lower, and look at that monster surge on IBM. What happened here, folks, and this was perfectly placed as well to be almost an interesting catalyst to the market, also helping the rebound this morning after the gap down. Miraculously, right around 10:30 in the morning, IBM announces a $10 billion share buyback, and the stock just rips higher. Now, remember, IBM is a key component of the Dow. So when that took off, that's exactly what pushed the markets to the flat line, basically to the positive side for just a split second before now just settling down. You can see IBM's now settling just up $1. And again, being a key component of the Dow, that's going to help the Dow very much so, and has really helped the Dow today. All right. Other than that, folks, we have some key stocks out there that are making moves as well. Most of the technology plays are higher on the day. Amazon's up 71 cents. Apple's flat. Baidu is trading up $2.30, while Google is up $2.55. So again, the NASDAQ 100 is doing well today. Goldman Sachs is higher, but JP Morgan is down 2 pennies. Bank of America, which has been crushed lately, and again, a lot of foreclosure worries, but Bank of America shaking them off today, trading up 21 cents. Interesting little idea here. If you go to your daily chart, you had a bottoming tail right here a few days ago, and the key is to look for that bottoming tail to be closed below. If you close below that bottoming tail, you can look for a possibility of further downside. But notice how yesterday we did not close below it. You had a tail below it, you never closed, therefore you don't have a breakdown there, and today you are responding. Oftentimes they'll take out that bottoming tail very briefly to possibly flush out weak hands or stops that are right at that level base or right below, and that looks like is exactly what happened yesterday. Bank of America pushed through the low of that bottoming tail, and then again it closed back above it, and then today obviously a good rebound on BAC up 22 cents, which is a solid move for that stock. And again, financials are kind of mixed today, but technology continues to be strong. Apple, Amazon, Baidu, Research in Motion, all those up. IBM is up, as I mentioned. Intel, Microsoft, Cisco, all higher as well. All right, now, just going into the end of this video, let's go back to the SPY and take a look. Again, you can see that the volume is minuscule at this point, 87.7 million. Very tiny candles going into the afternoon session. I do expect it to mostly stay like this into the end of the day. Be aware, it's all a dollar trade like that right now, and POMO, Permanent Open Market Operations by the Federal Reserve, that was today. Again, that can be the result of lifting the markets off the lows of the day. And again, you might say to yourself, well, isn't that manipulation? And the answer is absolutely it is. But just like, you know, the U.S. and Geithner, Treasury Secretary Geithner calls China a currency manipulator, and again, that's kind of the pot calling the kettle black, as the U.S. is doing more manipulating, most likely on the dollar at this point with the weak dollar policy by the Fed. So just keep in mind, you know, yes, there's manipulation in this market, but that's something we all have to just understand and trade, and that's why you need to join the Research Center at InTheMoneyStocks.com. $49.99 will enlighten your world more than anything else in this world will. Join it now, and I strongly encourage that to enlighten yourselves and really start making the type of money that you deserve to be making and understanding the manipulation so you can profit off of it. I mean, that's the bottom line. There's a reason why over the last 2 weeks I told my subscribers not to short anything else in this market. There should be nothing being shorted into the elections because the markets are not going to sell off. Simply put, it's manipulation. It's going to keep the market up, so don't do it. Why would you put yourself at risk when you know it's not going to fall? Exactly. All right, take care, folks. Come join us at InTheMoneyStocks.com, and we'll talk to you soon. Take care.